Biggest single challenge, I think, is capital. We're at a moment now where a lot of the investors who have driven climate investing and impact investing generally are taking a step back. So there's a much bigger role, I think, now for the capital markets in India and in other parts of the world to step up and really play more of a role. So if I take you back to when I started in India in 2008, we were talking about physical microfinance. We were talking about people going to villages, giving cash, taking cash. Since then, we've had the smartphone revolution in this country. We've had the advent of UPI and a lot of other digital public infrastructure. We've had Geo, which is something I could not possibly have imagined. Data effectively becoming almost free in the country. And now people are talking about AI, where you have geopolitics, and America and China and tariffs. And what I notice is the Indian economy still just keeps growing. And I think the reason for that is at the heart of it, the Indian consumer, the domestic consumption story in India.
Hello and welcome to The Shift, powered by ETH Insights. It's a platform where we sit with industry leaders, policymakers, and experts to delve into key issues changing the world around us. And with me today is a very special guest, Stewart Langdon, who's a partner and co-head South Asia at LeapFrog Investments. Stewart, welcome to ETH Insights.
Thank you. It's great to be here.
Great pleasure having you. So to start off, let's focus on impact investing and spotlight scale, if I may. Gone are the days when this was perhaps a niche strategy. Today it's this scalable model in emerging markets. Yet what are the gaps do you see that make it harder for other sectors to really adopt this impact first approach?
The good news is impact investing has come on a long way since LeapFrog started in 2008. Back then, there was a lot of questions around really the very nature of impact investing. What roles does the private sector play in driving social and economic development? The idea back then was that businesses make money and then government and charity would deal with social issues. If I fast forward to today, I think that mindset has really gone away. People understand very well now that there are many businesses in India, including some of the biggest businesses in the country, that are serving low-income consumers with the essential services they need, things like health insurance, micro-lending, of course, famously for many years. And of course, now the climate transition as well, where you have many businesses getting into different areas like solar, where India is so ambitious and so successful as well. So I think the good news is that mind shift has really happened, and businesses are much more, investors are much more comfortable with that notion of profit with purpose investing, social impact investing. The challenge is there's still a very long way to go. India is still a country where income levels are very low, particularly outside of the main metro centers. So I think the big challenge is that there's just so much to do in areas like healthcare, where penetration of healthcare services is still very low. Penetration of life insurance is very low, which means that, if a family breadwinner dies, then, that can still push the family back into destitution. There's still a lot more to do in areas like credit. And of course, the whole climate piece where, energy, mobility, and so on, there's still a lot of work to do. So I think there are still some very large gaps. And the biggest single challenge, I think, is capital. We're at a moment now where a lot of the investors who have driven climate investing and impact investing generally are taking a step back.
Okay.
So there's a much bigger role, I think, now for the capital markets in India and in other parts of the world to step up and really play more of a role.
Right. With the digital identity that all of us have today, there's AI-led underwriting that's kicked in, there's real-time payments. What are the most critical innovations that you think are sort of needed to truly reach the unbanked consumer? And there are quite a lot of them as we speak.
I think what's really remarkable to look back on in the last 20 years is how many big leaps there have been in terms of India's progress. So if I take you back to when I started in India in 2008, we were talking about physical microfinance. We were talking about people going to villages, giving cash, taking cash. Since then, we've had the smartphone revolution in this country. We've had the advent of UPI and a lot of other digital public infrastructure. We've had Geo, which is something I could not possibly have imagined. Data effectively becoming almost free in the country. And now people are talking about AI. So my sense is that these are compounding pieces of progress in India. One thing builds upon the other, and probably 10 years from now, we'll be talking about more innovations that have completely changed the country that you or I could not imagine today. The two that we see on the horizon, I think, are AI, first of all. That's the thing that everybody's talking about. Our portfolio companies are having a lot of success building that into areas like underwriting within credit or risk management within insurance or for other areas. So that is people like to say, a thin layer that will go across everything and make a big difference. However, there's still a big question around India developing its own LLMs, particularly in local languages. There's still a big question about access to GPUs. There's still a question about regulations. So I think there's a lot to do to build the infrastructure that's needed. Energy, of course, will be a big piece for AI. But certainly we find our portfolio companies can make use of that technology if the infrastructure is there. And then also increasingly, the thing that is coming now is stablecoin, which I think can help the country to move even faster in areas like remittance.
How effectively is AI adding to that scalability conversation?
I mean, what we notice is that for the businesses that we invest in that are serving emerging consumers, that's low-income people across Asia and Africa, India, obviously, but also other parts of the continent. Because many of them are on smartphones, they have quite big data profiles. And that means that AI is actually relevant to them. So our portfolio companies find that when they're looking at doing marketing strategies to reach that group or underwriting strategies to manage risk better, that it's a really useful technology for them.
Right. Interesting. Now, let's focus on credit gaps in the Indian context. The gaps are still prevalent when it comes to MSMEs or perhaps women-led businesses in India. What are the unique investment structures or perhaps even partnerships that you see can really bridge this gap?
We've been very fortunate that from the beginning, we've been very focused on MSMEs and women entrepreneurs. So we invested in, for example, in a business in Pune called Electronica, which serves the MSME group, and FinCare, which is formerly a microfinance entity, now a small finance bank that reached, I think, 2 or 3 million women. Microfinance has always been a very pro-gender activity. So I think more investment is needed in that kind of area and increasingly in the small finance bank arena as well, which has been that license category has been great for women. MSME is still very overlooked. I mean, we're at a point now where I think MSMEs would account for maybe 35% of the economy, something like that. Huge amount of employment, over 100 million people, I think, work for MSMEs. And when you go and meet these folks, very few of them have access to formal credit.
Right.
Banks in India are not well set up to serve a guy who needs to finance a machine. That's just not their business. That's not their core business. So very much overlooked by the banking sector, yet very good credit profiles. I mean, if you can help these folks to get access to livelihood assets, then typically they can 5x or 10x their revenues. They can employ more people. And that side of the Indian economy, that engine of growth, I think is completely overlooked and something we've had a lot of success in. So I think we need more of that focus, more capital going into that MSME group.
Right. Now, you have executed several successful exits from India. What have these transactions taught you when it comes to long-term value creation, and how has the exit strategy adapted over time?
The boring answer to this is that we have found with exit strategy, promoter quality is very important. And we've been very lucky to partner with people like Mahindra Group, Shriram Capital, Northern Arc, best-in-class promoters, people who operate to the highest standards in terms of governance, very strong ability to execute, very high standards in areas like compliance. So focusing on very high-quality promoter groups, I think, has been important for us. I think that's enabled us to be successful on the exit side. I think India has certain structural advantages. Capital markets are very deep. So we've been able to have some success, for example, in the IPO market. We had very successful IPO of Northern Arc last year, and we want to do more of that type of thing. But also because of its position in the world economy, and we're talking about, India now being soon to be the third biggest economy in the world, that's something that strategic investors are very excited about. So we've been fortunate enough to be able to sell different businesses to European companies, American companies who need that growth, who want access to that growth. What is different now is that I think Indian groups themselves are playing more of a role. Maybe if I was to take you back to when LeapFrog first started, most Indian groups simply weren't big enough to do those kind of large transactions that we do when we exit businesses. But now they are, because, we're now talking 18 years forward, and these groups are much bigger, have much better access to capital. So
Right.
I think that's the piece that's come through in recent times. Indian strategics, I think, playing a much larger role in the exit piece.
Okay, interesting. How does the India story look from the outside to you?
The India story from the outside looks tremendous. I mean, I come from a country, it won't surprise you to learn, where we debate whether we're going to have 0.5% growth or 0.3% growth. We have a budget shortly that everybody is terrified about. And then you come here to an economy that's growing. Here we debate whether it's going to be 6% growth or 7% growth. So growth story is obviously incredible. The scale of the country, everybody knows, is incredible. But the thing that is different now is the resilience of the economy. So we're in this period now where you have geopolitics and America and China and tariffs. And what I notice is the Indian economy still just keeps growing. And I think the reason for that is, at the heart of it, the Indian consumer, the domestic consumption story in India is so strong. I mean, a couple of months ago, everybody was nervous about tariffs. People are moving beyond that. We've had the GST reforms, which I think were pretty successful in boosting the consumption piece. So again, if I think back 10 years ago, where people used to talk about India being one of the fragile five, nobody talks about India being fragile. Now, I think the resilience that's been there through this last cycle has been very striking.
Right. You mentioned geopolitics. The past year or two, there have been severe geopolitical shifts. How has that impacted the global capital flow when it comes to impact investing?
Well, I think it has. I mean, you can't discount the fact that the approach to climate in particular in the US has changed. The US is obviously an enormous capital market. It does make a difference. I think also Western aid budgets have been cut. Not that India is too reliant on aid, but that again, less money going into development finance does affect capital flows in India. But the reality is the opportunity set in India is very exciting and does not really need too much of capital to come from government or to come from America, because returns are very exciting. If I talk to you about the solar market in India shooting for whatever it is, 500 gigawatts by 2030, that's a huge opportunity for commercial investors. So what I think is needed now is more people like LeapFrog, who are from the private sector, whether it's in Europe or Asia, maybe up in Japan, obviously important investor for India, or the domestic market. That opportunity in areas like solar is very large. The opportunity in health insurance is very large. So, of course, the geopolitics will be there, and capital flows from America or other places might be larger or smaller. But I think the opportunity for domestic investors and for private investors around the world is very large. So, I think if people are passing up the opportunity and impact in climate in India now, it's probably their loss more than India's loss.
Right. Interesting. Now, education finance, it's been on the rise. There's clearly a huge demand for it. What is your assessment of the commercial and social, potential of the sector?
I mean, I'm a big India fan. Education is an area where I think more needs to be done, because India is a country, a huge number of very talented, very bright people. And yet it remains the case that India does not have a single one of the top 100 universities in the world. The schools are certainly under-resourced. You would probably agree with that, I would think. So I feel like education is a sector where there's a lot to do. We have had a very good start. We invested in a business called Auxilo, which finances young Indian people to go overseas to university, which is great. It's done that for about 12,000 bright people who've been able to go to the world's top institutions. But what we really want is a stronger education sector within India itself.
Right.
And so Auxilo has started to do school finance. That's been a good business for them. They're now also getting into skills, which is an area people talk about much less, but I think there's a need to provide more finance to people who want to upskill. And this for us is just a classic example of a profit with purpose business, because the social impact case is so strong. If you invest in people to improve their skills, or you invest in schools, then of course that has a huge impact on human capital, but it's also, it's also an attractive business model. It's very profitable. So it's something where I think you can build a very good business case at the same time as helping people to fulfill their potential.
Right. Interesting. Stewart, this has been super insightful.
Thank you.
Thank you so much for taking on the time.
No, it's my pleasure. Thank you for having me on. Cheers.
Rest is.